Well, if we just compare loan to loan in 1983, instead of a 13% loan rate, how about a 10% loan rate? That's a 3% differential. And if you remember, the dividend rate was over 11. Well, how you doing now? Just comparing loan to loan, if we go throughout time, you can see most of the time the outside loan, the prime minus 50 basis points, is ahead in orange. And there are periods in blue where it's slightly behind. And if it's ever behind too much, you always have the option to flip it back to the policy loan. So you're never, ever locked out of that. You can always say, thank you, outside lender, for your services. Please refinance my entire loan balance to my policy loan. I'm done with you. And maybe you would have done that in something like 2006 and 2007. What happened? They did some raising of interest rates. So in 2005, prime was 5.25%, and prime minus 50 was 4.75. Obviously lower than the policy loan rate at 5.87. But the next year, look at what happened. They quickly and noisily raised prime to 7.5, then 8.25 in 2007. And what about that lag effect? Well, now the lag effect is working in your favor because the policy loan rate is only 5.77. So the policy loan rate is 1.23% and 1.98% better than what you can get at prime minus 50 basis points. And you may want to flip it back to the policy loan.